Hi everyone, today I'll be talking about how to invest in S&P 500 ETFs as a Canadian. There are many options that deal with foreign exchange and withholding taxes that Canadians need to consider before jumping in. I made a video last week explaining what stock market indices are, so if you're new to investing, make sure to watch that one before watching this one. Please like the video and subscribe to the channel for the short intro. The S&P 500 is an index of the largest 500 companies in the US. If you reinvest the dividends, you would have achieved an average return of 9.8% on your investment over the long term. It's very hard to beat this number. Even though these are US companies, you're actually getting global exposure. You're dealing with Apple, Amazon, Google, Facebook, Nvidia, and Tesla, just to name a few. So with one investment, you're diversified across sectors and geography. If one sector like tech does poorly, it might be offset by utilities. If healthcare or telecom sectors do poorly, it can be offset by increases in the financial sector, as an example. That's how you get this very high average return of 9.8%. There are 4 ways to invest in the S&P 500. I'll talk about 2 of them here. You can do robo-advisors like Wealthsimple. I show you how to invest in robo-advisors in a separate video series here. There are mutual funds, which I've never recommended on this channel, and I never would recommend because of the high fees. And then there are US ETFs and Canadian ETFs, which is what this video is mainly about. If you have US dollars, there are 3 good S&P 500 ETFs, not in any order. There's ticker VOO, which is the best in my opinion. There's ticker IVV and ticker SPY, which is probably the most famous. This is the one that people use to day trade the most. These are in US dollars. Now for Canadians on the TSX in Canadian dollars, there are 4 good ones to look at: VFV, VSP, XSP, and ZSP. Again, these are all in Canadian dollars. Now this is where it gets complicated. Which one do I choose? Which currency do I invest in? And then which account to purchase these ETFs in? VSP and XSP are both currency hedged, meaning they have systems in place so your investment doesn't get affected by fluctuations in the US dollar or the Canadian dollar. Your investment only depends on the performance of the fund, which is the S&P 500. This is good since you're not exposed to another risk, but it could be bad. What if the US dollar shoots up 30%? You're missing out on that currency gain. But then on the other hand, you're missing out on any currency loss as well. But you're not really missing out, you're saving out on any currency loss. So between these 2 ETFs, if I were to choose one, I would go with VSP. The other 2, VFV and ZSP, both are similar. These are non-hedged. So you're at risk of both the ETF and the currency. So if the ETF goes up, but the exchange goes down, it could wipe out your gains. But I'll always have to present the other side. The ETF could drop, but then the exchange goes in your favor, eliminating your losses. It's all a risk we take. Looking at both of these ETFs, if we were to hold for years and years, if not decades, the biggest factor, the expense ratio plays the biggest factor, and they're both sitting at the same expense ratio of 0.08 and the management expense ratio of 0.09. If I were to choose one, I would go with VFV. Not taking anything else into account, if I were to be asked, out of these 4, which is the best ETF, my personal opinion would be VFV. Even though you are at risk of the currency and the stock, historically, the US dollar has been appreciating and the stock has been appreciating, so you're kind of double dipping in the gains. Look at the performance of both VFV and VSP side by side. You would be greatly outperforming by taking VFV, the year to date, 1 year, 3 year, and 5 year metrics. Now here's where it gets more confusing: withholding taxes. Dividends you receive on US listed ETFs are subject to a withholding tax of 15% unless you're holding the ETF in the correct account. The IRS automatically withholds 15% of your dividend. I'll try to show an example of Apple or Nvidia dividends that I receive. It'll show the dividend and the withholding tax. Keep in mind, Canada and US thankfully have some treaties in place where Canadians can get some relief when it comes to investing in US stocks. But what does that mean? If you're holding a US ETF that pays dividends in your RRSP or RRIF, they do not have a 15% withholding tax. In our treaty, because RSPs are registered, the US doesn't take the 15% from us. It's a little benefit we get. But here's another thing to keep in mind. I only mentioned RSP and RRIF. This doesn't take into account a TFSA or RESP. There are no treaties for those 2 accounts. Those are not registered. You will still be charged a withholding tax. So it's important stuff to keep in mind. Paying withholding tax in your TFSA eliminates the whole purpose of a tax-free savings account, right? Now let's get even more confusing. If you purchase a Canadian listed ETF that holds US stocks, in any of these accounts I mentioned, there is no treaty here. There's no tax savings or tax haven. You will be hit with withholding tax. So VSP and VFV and ZSP, since those are Canadian listed, but holding US stocks, those will be hit with a withholding tax in the returns of the fund. I'll try to break it down as simply as I can. If you're currently investing in your RRSP, I would recommend VU. This means you have to have US dollars. So there's a little currency conversion there, but you won't be subject to withholding tax. I would not purchase one of the Canadian ETFs in your RSP because of the taxes. It would be charged and lost forever, hurting your returns and hurting your retirement. If you're investing in a TFSA or RESP, I would recommend the Canadian ETF VFV because of the returns, low management expense ratio, and it's purchased in Canadian dollars, so there's no need to convert anything. Again, I'm trying to keep this video as simple as I can for beginners. We can go deeper, like what if I already have USD without having the need to convert? My answer would change. What if I don't have access to USD? Would I still, let's say my conversion fees are high if I need to convert from CAD to USD, would I still recommend VU? I'll save the more advanced topics, maybe complicated discussions for later. I wanted this video to help out my beginner investors understand the different alternatives and maybe tax complications when it comes to buying the S&P 500. I hope it's all clear. Let me know if you have any questions. Thanks for watching and tune into the next one.